Hi everyone, let's talk about why it's a good time to buy bonds. Then of course we'll talk about some of the charts starting with the dollar versus the NASDAQ, STIPs, DLT, as well as LQD. Then I'll go through all of my account holdings as this is my monthly wrap up for September, starting with Worthy Bonds, Groundfloor, Fundrise, and M1 Finance. Then we'll go over my monthly tracker. Then we'll finish up with some of my thoughts on Elon Musk's AI Day. Definitely like and subscribe if you like this kind of content, and hit the bell so you don't miss out on any future episodes. Really helps out the channel, and let's get started. If you haven't noticed, bonds are in a bear market right now, along with pretty much everything else, but bonds are getting hit quite a bit worse than everything. This is because inflation is really starting to eat into those returns. I mean, this makes sense. This is a fixed income asset, and as inflation continues to go higher, the returns won't be as good. And you can see here the overall bond index is down more than 20% from its peak, and that this has been a devastating sell-off after treasuries hit an 11-year high in June. And you can see what that looks like here. So basically net zero here in January of 2021, and since then it's been declining pretty substantially all the way to current day minus 20%. They say many investors are betting on the weakness of bonds to continue as the central banks continue to tighten up monetary policy. Here they show another chart of the Bloomberg Aggregate Bond Index, down not quite as much as the previous index, but still down quite a bit, almost 15% at the lows, and it's up slightly since then. The main point here is that bonds are extremely cheap, and they are historically cheap compared to previous decades, and I'm going to show that in the charts next. Let's start off by looking at the dollar versus the NASDAQ. I just want to show that the dollar continues to rally really aggressively. Then you have the NASDAQ superimposed over that, and I want to highlight anytime the dollar does a slight pullback, as we had here in the middle of July into August, we really start to see a rally here in the NASDAQ and growth. And hopefully we're starting to see a little bit of an overextension here in the dollar, and we might get a slight pullback and hopefully a little bit of a rally in growth. And right now, growth and bonds are traveling generally in the same lines. So let's take a look at those bond charts. This is STIP or STIP, 0 to 5 year government bonds. You can see this is the weekly chart. Going all the way back to the starting of this ETF, it opened at $100 per share. Currently, it's at $96 per share and down from the highs of $107. So it looks pretty dramatic. It's only down $10 on the net value, but even with that, it's still a pretty good time to buy. We haven't seen prices this low since COVID. Moving over here to TLT, again on the weekly chart, you can see we've been in this pretty big bullish channel. And since then, we've broken out of that to the downside for the first time ever in the history of this fund. We had this bottom line here that was supported going back to all the way to 2007, 2010, and then 2011. Currently well below that, seeing prices that we haven't seen since 2013, back here again in 2011, 2010, and then during the great financial crisis here in 2008, 2009. So bonds are extremely cheap compared to what they've been, coming down from $172 per share all the way down to $102 per share. So extremely cheap compared to where it's been historically. Last up here, I'll show LQD or investment grade corporate bonds. Again, very cheap compared to where it's been. The highs were $138.70 or so, and it's back down to $102, kind of in that same price range as the previous one. Prices we haven't seen since 2008, 2009. Once again, very cheap compared to where it's been historically. You can see we are actually getting a little bit of divergence here on the RSI. We've had higher prices and lower RSI here in May. Prices are still continuing down, but RSI is slightly higher than it was previously. So let's take a look at how to action this. This is the research section on M1 Finance. You can see this is STIP, the one we talked about. Currently, the expense ratio is very cheap, and the dividend yield is over 6%. And looking at the chart here, looks the same as what we just showed you. Very cheap historically, you get those dividend payments every single month. And right now, this looks like a buy to me. Next up, we have the Vanguard Total Bond Index, BNDX. Still pretty high dividend yield at over 4% here. Very cheap, again, another monthly payer. And currently the price is at $74 per share, down from around $57, $58. Back here in 2019, it was up to $59, so several dollars cheaper than it was. You got that good yield with a pretty cheap expense ratio once again. Next up, we have LQD, another one we looked at. Very cheap compared to where it was. The expense ratio is a little bit higher at 0.14, and dividend yield a little bit less at 2.8. But this does have a little bit more potential to move in terms of capital appreciation, with the highs being that 135 to 138 and current prices at 102. Last up, we have TLT. that on the 5-year, you can see those highs at 170 and current price at 102. Expense ratio pretty much the same, and dividend yield a little bit cheaper, a little bit lower at just over 2%, but again has that potential to get a pretty good rally in terms of capital appreciation. Moving over to my investments, I do have worthy bonds here. It's still sitting a little high at $5,100. I might look to reduce this a little bit just to move some of that money over into the funds that I was talking about. They seem like a better value currently, and this isn't keeping up with inflation anymore at 5%. I know some of those other ones are still below 5%, but it seems like there's more capital appreciation potential and still get a pretty decent dividend. Moving over to Groundfloor, I still have all of these investments at a rate just above 10%, so a little bit higher than inflation, getting a real return here. Still a little bit over $10,000. I've added a little bit of money this month, and most of those are in C notes. I did do a few higher interest rate notes here in D and E this month, just to see what happens. Not a ton of money here in those higher percentage notes. Still, the bulk of my money is in those C notes. I wonder if the interest rates on these will go up a little bit based on the overall Fed rate, as well as what the market is giving. But so far, still good returns. I am a little bit concerned that the real estate market might go down, and they might see some issues with the way that Fundrise invests their money, but so far that hasn't happened. Moving over to Fundrise, still continuing to do pretty well here. Year to date, up a little bit over $2,500. They did add this little tracker here to show how close I am to their highest level or their premium level. Still got $48,000 to go still. So quite a ways off, but pretty cool that it shows it there. And you can see all the benefits here. Basically just opens you up to more investment opportunities. If you like Fundrise, they're still offering $50 to new investors, and you can still do IRAs. Then you can see all the new acquisitions for my investment portfolio, basically single family homes right now, which is pretty good based on rent and the value of these homes. Moving over to my TSP account, you can see it's down a little bit here, just over 74,000. Mostly in stocks. I do plan to start buying bonds again here. Otherwise, I have a little bit under 5K here in government bonds, a little bit less than 3K in the total bond ETF, and then you can see the values here for the S&P 500 and the total stock market fund. So returns right now not great in any of these funds. Government bonds continues to make a little bit of money, but I do plan to buy F bonds here in this account starting next month. Moving over to M1 Finance. The purpose of this fund is really just to maintain value and gain a little bit of growth. You can see my total returns is down almost to negative, up just $150 here, and you can see that's because of dividends. Market growth has basically stalled out, down almost $1,000 on this account, and the majority of that is due to real estate as well as the Vanguard growth funds, and you can see the bond funds are down quite a bit as well. But you can see that I have $150 set to go into the markets on Monday, and what I'm going to be buying with that is the Vanguard Total Bond ETF as well as STIP. I know it only says $25 here, but it will be that $75 or about half of the money that I put in to each of these. And those funds are in the midterm bonds. You can see I added those in here, and those will become part of this portfolio. So I can get that better dividend return every single month. And I do think they are quite cheap right now, and that should boost the dividends that I see in this account. Lastly, here we have my individual trading accounts, my Roth IRA that I trade in, as well as my individual account, down quite a bit year to date. I do practice the wheel method in here, so it's going to lose money along with the rest of the markets, but hopefully I lose a little bit less than everybody else. If you're more interested in this, check out my video from yesterday. Looking at the monthly tracker, you can see we're down overall a little bit over 2%, even with my monthly income. Still continuing to lose money in these markets, pretty tough out there. Trading down, not too bad, a little bit less than half of what the overall stock market was down, even with a little bit of added money into the markets, still down almost 7%, and then trading down a little bit more than 3%. So still continuing to beat the markets in terms of trading, which is good. Otherwise, going down the list, real estate up just slightly, Lending Club continuing to downtrend, cash up just with my monthly income, and then trading. And this money will get distroed out across the various assets and then a couple of bills. Definitely like and subscribe if you like this kind of content, and hit the bell so you don't miss out on any future videos. Really helps out the channel and trying to grow and reach out to more people and help spread that financial knowledge. And with that, let's get to today's jelly. Usually outside of the markets, but today, Tesla's AI Day I thought was pretty interesting, and they are trying to make robots for every single person. So Tesla had their AI Day, and they showed off a humanoid robot. Basically looked like this. They used actuators for everything, so it's electrically driven. It has a battery right in the torso. It's pretty cool. Walked around the stage. They want it to do all kinds of things. Basically, right now it works in the warehouse. They were able to pick up boxes and things like that with it. They showed during the video. Otherwise, they showed what it looked like when it was looking at objects and how it identified and made decisions. And basically, it's a computer in the head, and it uses cameras to visualize everything and then moves the actuators based off the battery. Pretty cool concept. Didn't move very fast, and it definitely needs more development, but right now it looks pretty cool, and it's something that I think will be pretty impactful in the world, potentially in the next 5 to 10 years or so. Let me know down in the comments what you think of these humanoid robots, and make sure you like and subscribe before you go. Good luck in your trading and investing, and have a great day.